general market indicators. There are two indicators I want to show you, and I very much want to encourage you to use them. At least one of them is publicly available and it's free. The second one I get from TradeStation, but I imagine it's available just as well on other programs. There is this wonderful website. I like it very much. The company is called Barchart, barchart.com. They have very nice, very clean data. And every day I look at this page, which says current new highs, new lows. What I do here is this. There are three pairs of numbers I look at. 1 month's highs, 1 month's lows. So basically, I could spend an hour talking about the new high, new low index, which I believe is the best leading indicator of the stock market. Those of you who know Spike Trade know that every night we send out an updated chart of the new high, new low index with our commentary. Why? Because we consider the new high, new low index the most important leading indicator. Now, what's new highs and new lows? New highs are stocks that are making a new high for the year. They're the leaders in strengths. New lows are stocks that are making a new low for the year. They're the leaders in weakness. For example, if we look at Friday's data, 302 stocks made a new high for the year. 216 stocks made a new low for the year. So we have more leaders to the upside than to the downside. But the balance, the 86, we have 86 more new highs than new lows, is a ridiculous number. Because if we pull up a chart, we can see that on October 31st, there were 389 more new highs than new lows. Right? So the new high, new low index was 389. Now it's 86. And if we compress the data even more, we can see that earlier the new high, new low index was in the 600 range, and et cetera, et cetera, et cetera. So basically 86 is a very, very feeble number. We still have more bullish leadership than bearish, but that leadership is steadily becoming weaker and weaker, and I am waiting until these two numbers flip, when we have more new lows than new highs, which is we're very close to. And that's, I think, when the market will be ready to tip over and go. For somebody who is not an active follower of the market, what indicator should I follow? We'll say the 12 months new high, new low index. As long as it's positive, you're okay. Once it's negative, pull everything out. But in any case, I consider that the single most useful indicator, and I'm giving you this website. Just pay attention to this balance, especially on a 12 months basis between new highs and new lows, because that's the lever for the market. There are many other items to consider with the new high, new low index. Gary and I wrote an ebook, the new high, new low index. Another indicator, which I have on TradeStation, stocks above 50-day moving average. When a stock is above its 50-day moving average, it's obviously bullish. Right? It's outperforming itself. When it's below that moving average, it's obviously bearish. It's underperforming itself. And here is the indicator. If you look at the new high, new low index, this is the new high, new low index on the weekly chart. From a year ago, it's been going lower, 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 right? So the quality of bullish leadership is sinking. This is new high, new low on the daily chart. Since mid-October, the leadership is sinking. So count me a bear. But coming to this indicator, stocks above 50 moving average, they come near the upper line and turn down. They come near the lower line and turn up. So basically, when everything gets very, very happy, it gets worse. And when everything gets very depressed, it gets better. And so this indicator, this chart is updated through Friday. This is what we get from stocks above new high, above their moving average. And the message is, the market is beginning to sag. I think we have a test. It shows you 3 charts. And the question, what is the impulse color at the right edge? So 3 columns. First column, what color do you think it is? Green. I would say it's green because moving average is rising and the MACD histogram is rising. What color is this guy?
Blue.
It's red because the moving average is declining and the MACD histogram is declining. It doesn't matter that it's above zero, it's declining. What color is this? Why is it blue? Moving average is declining, MACD histogram is rising. Okay, so these are your answers.